Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. By the way, is my microphone, you tell me, well, we'll wait a little bit. My microphone volume might be a little bit low. Actually, I'm just gonna turn it up just a little bit there. All right, hey guys, we got ECB press conference today, a couple of the data points, and then the big one tomorrow. So I think we're still gonna have plenty of activity here in the markets this week. Coming over here to the charts, you can see here in the Treasury, we're moving down. We kind of came back to that like same sort of area, and then but we're bouncing in the same area too. But this may just be in anticipation of the ECB press conference. Oh, actually, you know what? It's probably because the UK central bank like raised interest rates 50 basis points. So okay. S&P 500 doing okay yesterday, but then getting crushed by Facebook earnings, which were just so bad, like so bad. It's still not loud enough. They were so bad, guys. I can't even. Can you hear me okay? Hey, Ash K, Big Toasty, how you doing? All right. And oil yesterday, at first they took off, but then in the end they came back down, kind of a head fake there as the OPEC does their thing and did increase supply. Natural gas coming back off of that huge run that it had yesterday. It's a good thing. Gold and silver, kind of the same story, just kind of skidding along its moving averages, and copper kind of coming back a little bit. And then we've got the dollar. Well, we should note yesterday that Bitcoin took a bit of a hit yesterday as well. And the dollar, well, they're finding some support at 96 here this morning. So that's kind of where we got. Yes, you say the mic is good right here. Was it good before? I don't know. Probably what it does is just kind of makes it more. Anyways, you might not even notice the difference. When I was recording, I was trying to record something on the microphone and it was too hot in the other application, though. I don't know why it's different between applications. I find that really frustrating. All right, back over here. Let's make sure that we've got financial juice running here. Woo! We do get U.S. initial jobless claims here in about 2 or 3 minutes. And then after the market open, we get U.S. market services PMI final. And of course, we're going to get the ECB press conference is going to start here at the bottom of the hour, which I suppose we will have to listen to. Biden has just released a statement about the Special Forces mission in Syria, saying that the leader of ISIS has been killed. The entire business model of corporate media is broken. Sponsors pay for their own version of the truth to be told to audiences, and it has become adversarial only to those who oppose the status quo that supports them and their alliances. It's true. What I see going on in our society right now, I think that in every case, it's the same problem. Overfitting. We have decided that one metric is the most important thing that matters, and so we overfit to that metric, and then just kind of look the other way as all of the adverse consequences of overfitting to that one metric become apparent. And you're seeing it on social media where they overfit to engagement, and so like the quality of content is just trash, and you're teaching people to be emotional essentially. And then you see it in the news where they basically just overfit for clicks and for how much money they make from advertisers, and you get into the point where people don't trust the news. Okay, here we go. They are pulling here. Okay, so the jobless claims was a little bit better than expected. And productivity was way higher than expected, 6.6 versus 3.9. High productivity is a good thing, though. Not too much of a reaction here in the treasuries. S&P 500 seems to be, a little bit happy about it. Make people more emotional equals they're more prone to make impulsive purchases. Well, I don't know if I could say that it was intentional. I don't know if people are more or less prone to make impulsive purchases right now. That's a good theory, though, based off of what we kind of believe, isn't it? Like, I think that it's most apparent just in the way that people, react to news and things like that, right? Hmm. Hold on a second. I wanted to keep a little bit better track of how big the swings were in the treasuries, so I put this swing indicator on my chart, but it's just a little bit too thick. I can't really see the chart. Zigzag width 1 and make it like dotted. There we go. That's a little bit better. Okay. LaGuardia is speaking, so let's go find that. And look, it's already right there.
First quarter, as the
There we go. Can you hear her okay? Make her a little louder.
On economic activity. Shortages of materials, equipment, and labor continue to hold back output in some industries. High energy costs are hurting incomes and are likely to dampen spending. However, the economy is affected less and less by each wave of the pandemic, and the factors restraining production and consumption should gradually ease, allowing the economy to pick up again strongly in the course of the year.
Big Toasty says Axiom futures are trading news. What do you mean?
Risen sharply.
You mean that a lot of what they do is trade news? Yeah.
Surprised to the upside in January. This is primarily driven by higher energy costs that are pushing up prices across many sectors, as well as higher food prices. Inflation is likely to remain elevated for longer than previously expected, but to decline in the course of this year. The Governing Council therefore confirmed the decisions taken at its monetary policy meeting last December, as detailed in the press release published at 1:45 today. Accordingly, we will continue reducing the pace of our asset purchases step by step over the coming quarters, and will end net purchases under the Pandemic Emergency Purchase Programme at the end of March. In view of the current uncertainty, we need more than ever to maintain flexibility and optionality in the conduct of monetary policy. The Governing Council stands ready to adjust all of its instruments as appropriate to ensure that inflation stabilizes at its 2% target over the medium term. I will now outline in more detail.
I want to pay a little bit better attention this time, so I might not be yapping quite as much unless responding to some questions from you guys.
And monetary conditions. Economic growth weakened to 0.3% in the final quarter of last year. Nevertheless, output reached its pre-pandemic level at the end.
Don't think you want to trade the S&P 500 right now.
Economic activity and demand will likely remain muted in the early part of this year for several reasons. First, containment measures are affecting consumer services, especially travel, tourism, hospitality, and entertainment. Although infection rates are still very high, the impact of the pandemic on economic life is now proving less damaging.
And Bitcoin is acting kind of weird here this morning.
High energy costs
Looks
are
like
reducing the purchasing power of households and the earnings of businesses, which constrains consumption
the ECB decision
and investment.
was separate.
And third,
before the ECB
shortages
decision.
of equipment, materials, and labor in some sectors continue to hamper the production of manufactured goods, delay construction, and hold back the recovery in parts of the services sector. There are signs that these bottlenecks may be starting to ease, but they will still persist for some time. Looking beyond the near term, growth should rebound strongly over the course of 2022, driven by robust domestic demand. As the labour market is improving further, with more people having jobs and fewer in job retention schemes, households should enjoy higher income and spend more. The global recovery and the ongoing fiscal and monetary policy support also contribute to this positive outlook. Targeted and productivity-enhancing fiscal measures, as well as structural reforms attuned to the conditions in different euro area countries, remain key to complement our monetary policy effectively. Inflation. Inflation increased to 5.1% in January from 5% in December 21. It is likely to remain high in the near term. Energy prices continue to be the main reason
raid on
for the
ISIS
elevated
leader.
rate of inflation. Their direct impact accounted for over half of headline inflation in January, and energy costs are also pushing up prices across many sectors. Food prices have also increased, owing to seasonal factors, elevated transportation
the Treasury has been bouncing around down here quite a bit, but they sure linger on the bottom of it.
Price rises have become more widespread, with the prices of a large number of goods and services having increased markedly. Most measures of underlying inflation have risen over recent months. although the role of temporary pandemic factors means that the persistence of these increases remains uncertain.
The rule of temporary pandemic factors? What? There's a rule now about
suggest
that?
a moderation in energy price dynamics in the course
Is that an
of
economic
22,
rule in
price
this report?
pressures stemming from global supply bottlenecks should
right?
also subside. Labour market conditions are improving further, although wage growth remains muted overall. Over time, the return of the economy to full capacity should support faster growth in wages. Market-based measures of longer-term inflation expectations have remained broadly stable at rates just below 2% since our last monetary policy meeting. The latest survey-based measures stand at around 2%. These factors will also contribute further to underlying inflation and will help headline inflation to settle durably
Wilfred
at our
Lagarde. Let's go look him
target. We continue to see the risks to the economic outlook as broadly balanced over the medium term. The economy could perform more strongly than expected if households become more confident and save less than expected. By contrast, although uncertainties related to the pandemic have abated somewhat, geopolitical tensions have increased.
I don't know. He's kind of.
Furthermore,
this one, he looks like a total bro.
High cost of energy
He got a kind of a pointy nose.
Stronger than expected drag on consumption and investment. The pace at which supply bottlenecks are resolved is a further risk to the outlook for growth.
Not many pictures of him, though.
Compared with our expectations in December, risks to the inflation outlook are tilted to the upside, particularly in the near term. If price pressures feed through into higher than anticipated wage rises, or the economy returns more quickly to full capacity,
did I get reset here?
Inflation could turn out to be higher.
Recentered, rather?
Market interest rates have increased since our December meeting. However, bank funding costs have so far remained contained. Bank lending rates for firms and households continue to stand at historically low levels, and financing conditions for the economy remain favorable. Lending to firms has picked up, supported by both short and longer-term loans. Robust demand for mortgages is sustaining lending to households. Banks are now as profitable as they were before the pandemic, and their balance sheets remain solid. According to our latest bank lending survey,
I'm not letting him out this time.
Increased strongly in the last quarter of 21. This was driven by
yelping
both
aloud.
higher
He doesn't
working
really need to be
capital
out.
needs stemming from supply bottlenecks and increased financing of longer-term investment. In addition, banks continue to hold an overall benign view of credit risks, mainly because of their positive assessment of the economic outlook. So summing up, the euro area economy continues to recover, but growth is expected to remain subdued in the first quarter, while the outlook for inflation is uncertain. Inflation is likely to remain elevated for longer than previously expected, but to decline in the course of this year. We will remain attentive to the incoming data and carefully assess the implications for the medium-term inflation outlook. We stand ready to adjust all of our instruments, as appropriate, to ensure that inflation stabilizes at its 2% target over the medium term. We are now ready to take your questions.
Thank you, President. And today the first question goes to Annette Weisbach of CNBC. Annette, please.
Thanks a lot. President Lagarde, thank you for taking my questions. My first one would be in light of that record inflation reading we've seen for January for the Eurozone. How did the discussion go in the Governing Council? Are there more frictions now? And is the camp of those who are calling for action is getting louder? And the second one goes on the market pricing in 2 rate hikes for 2022. You have been saying that a rate hike this year is highly unlikely. What are you saying now? Are you sticking to highly unlikely, or have you moved on? Thank you.
A little bit lower there.
Thank you very much for these 2 questions.
But just kind of like a stop run mostly, though.
So, concerning inflation, with the upside surprise that we have seen first in December, second in January, I can tell you that there was unanimous concern around the table of the Governing Council about inflation numbers. And obviously the impact it has on the near term and the impact that it has on our compatriots in Europe. Because we know that the burden is first and foremost borne by those who are most vulnerable, most exposed, and who face the day-to-day hardship of having to put up with higher prices. So I can assure you that that concern was across the board and around the table in equal numbers. So we had a very thorough and in-depth discussion about inflation precisely. And we're focusing on the latest information we have, but also the impact that it will have on our medium-term outlook. And that is clearly something that will be examined in more depth at the time of our March Governing Council meeting, when we produce more projections, which we have not on this occasion, when we can harness all the latest data that we have, where we can also have more information about the job markets, about wages, and where we can really analyze in depth what the impact is on our medium-term projections. We are all driven by the same mandate, which is price stability. And we are all concerned.
It doesn't sound like she's speaking hawkishly. The market is kind of reacting to her.
Also a concern.
I really don't like trading when the central banks are talking, but that was a move.
Decision unless we had proper and thorough assessment based on data and the analytical work that will take place in the next few weeks.
Well, that wasn't just a move. That was a pretty significant one, huh?
Concerning the inflation numbers.
All the way up to 8.4, so already
on, the
1.5 basis points higher.
Of, the rate hikes. You know, I never make pledges without conditionalities. And it is even more important at the moment to be very attentive to that. So, as I said, we will assess very carefully. We will be
S&P 500 taking it on the nose from that too.
We will do that work in March.
Taking it on the nose quite hard.
It will take us into the analysis of what are the drivers behind inflation in the short term, what are the drivers behind inflation in the medium term, and how the whole outlook and medium-term projections looks like. Let's not forget that we will continue doing so on the basis of our forward guidance.
So we need to get the Treasury needs to reach 21.5 is kind of the key zone that they've been holding the past
and that we will be gradual
3
in
or
any
4 days
determination that we make at the right time on the basis of data. Thank you.
Thank you very much, Madame Lagarde. The next question goes to Eric Albert of Le Monde. Eric, please.
Thank you very much for taking my question. A couple of hours ago, President Lagarde, the Bank of England increased its rate by 0.25%. 4 of the 9 members of the committee actually wanted more than that, wanted 0.5. You're going to tell me, of course, that different economies means different decisions. So could you tell me what is the difference between the 5.4 inflation in the UK compared to the 5.1 in the Eurozone. Why is it not the same course of action in the ECB? And the other question is about wage growth. What can you tell us about wage growth in the Eurozone? Do you see any sign of that? Are you worried about that side of things?
It's interesting because your second question is almost the answer to your first question. But I'll go back a little bit into history. The United Kingdom has had a history of much higher inflation than what we have had in the euro area. That's point number one. What is the critical difference now between our respective economies? The critical one, there are many other ones, but the critical one has to do with the labour market, where clearly there is a lot of pressure on wages, where there is scarcity of workers for jobs that are available, and where I don't want to take a political stand, but I think that there was a lot of non-UK labour force that eventually had to leave the United Kingdom, which has not been totally replaced, and where the shortage of work is actually having a bearing on the forces of the labour market in the UK. So
it looks awfully heavy
really,
there.
in essence, what is
the
causing
10-year.
the significant difference between the two. On the wage front, what we are seeing, and that
this is
we
a kind
can
of
really
a precarious
celebrate,
market, especially if you
is
want to go
that
long, because they
the
just,
euro area is
it's kind of a
the
little
lowest
slippery market, and then when they break those
number it
lows,
has
it
ever
just stops.
7% unemployed is a record number. The second aspect of that labour market is that our participation of employees in the labour market is back to the level where it was pre-COVID. So on those two accounts, we have good news to celebrate. What we are not yet seeing is a significant movement in terms of wage increases. And we are not seeing a lot either in relation to wage negotiations. And that
I feel like I want to
should be the next
be aggressive here, but
that we
it's
see
always
with
a bad idea for me
lower,
when it's ECB is speaking.
unemployment,
So
more people leaving the furlough schemes under which they were operating, and
I'll be right back.
the output gap closing gradually and economy returning to full capacity, we should see movement, and we are not seeing a lot of it yet. Now, of course, a lot of the information that we're getting statistically is backward looking, but we are also very attentive to what is happening and what is likely to happen. That is actually taken into account to a certain extent in our projection numbers. But clearly what will happen in the next few weeks and what we can see, both for our March meeting and then later
This
on
dog, I let him out one day, and now he thinks he should be out at this time every day.
The criteria of our forward guidance are fully satisfied.
I just can't win with this dog. I just can't. I can't stand
Thank
it.
you, President. The next question goes to Balazs Korani of Reuters. Balazs, please.
It's hilarious that she mentions wage increases because the ECB itself denied its employees the wage increases equal to what inflation data showed.
About standing ready to act, you removed either direction. And
I don't think.
Significance of that. If
I don't know. We'll see. We'll see what my company does. I haven't found out. Their
the two seem.
Their companies are still kind of passing out like the end of year reviews and all that sort of stuff.
And you're not ready to.
But I don't think that it's going to be 5%.
Going down.
I don't think it's going to be 5%.
You didn't mean to say that. The second question is about the quality of your projections. Do you maintain your full confidence in the ECB's projections? The track record of these projections have been quite mixed in recent quarters.
That's sure heavy, man.
It seems to me that it's clear to me that
trying to sell it down there is like really dangerous. You see how they moved like that?
So what do you think about the projections going forward?
Thank you very much for your questions. On your first point,
like where it says March and June are particularly critical.
You've done a good
what she said while I was away?
Compare reading of the various paragraphs that are included in our monetary policy statement, and it is a fact that we have removed the portion that says in both directions. And we now say the Governing Council stands ready to adjust all of its instruments as appropriate to ensure that inflation stabilizes at its 2% target over the
given this
term.
route that we just had,
which we debated,
where are we opening now
Governing
compared
Council,
to, yes, oh man, that's pretty
the
icky.
vast array of
Because we closed at like, let's call it 45.75.
depending on the
So
data
we're
that
opening
we
like a
receive.
whole 50
And
points
as
lower.
Hopefully some of the uncertainty we have around clears off. So we thought that as appropriate was perfectly adequate to cover all the moves that we could take and all the optionalities that are available for us.
Oh, I don't think I was here when that happened. I can see that a ton of volume traded there.
To really indicate that there was a change of tack.
Again, it's kind of like,
we were no longer
it's a round
in that,
number, right?
Low inflation environment for such a long period of time. And that was inserted in the December monetary policy statement.
So the question is, was the guy that bought at 45.15 an informed trader? And given the evenness of the number and the size of the order, I'm suspecting no.
Certainly the upside risk to our projection, particularly for the short term. And that is the reason why we've thought that as appropriate would cover all the optionalities that we have. Now, I'm glad you're asking me about the quality of the projection by staff. It's actually interesting because as managing director
it's actually
of the IMF,
interesting,
I
huh?
did had exactly the same questions in due course in my previous life. And what it means is that providing forecast, elaborating projections is a difficult exercise that is based on the
we can't
assumptions
know
that
for
you
sure,
make
but
and on
given the
models that you
context, I
use.
think that it's
And I
less
have full
likely that it was an
confidence that
informed
staff
trader.
does its best to include all the sensible, reasonable, rational assumptions that they can. And I can assure you that they go through a whole array of scenarios. What if, what if, what if, what if? And they use the models that they use, that many of you listening to me are also using. So it is hardly surprising that most projectionists, most forecasters have also been surprised
Oh my gosh, hold on.
by the inflation numbers, in particular in December and January, because very few of them could have anticipated the energy shock, the massive shock that is hitting our economies around the world, but particularly so in Europe, where we are so vastly export dependent when it comes to our energy. So that has clearly an impact that was not anticipated because it was not in the assumptions. Now, all the work that is done by staff to elaborate those projections, all that work is also assessed by the Governing Council. And each and every governor of each and every national central bank is consulting with their staff as well. And their staff are feeding also data into the aggregate projections that we produce, at least 1 out of 2 every year. Sorry, 2 out of 4. But the determination is made by the Governing Council. And indeed, there is an element of discretionary judgment. You know, we don't take projections just at face value. And this is, particularly relevant in the current circumstances, given the level of uncertainty, given the geopolitical risks around, there has to be an element of judgment that actually belongs to the table of the Governing Council. Thank you.
Thank you, President. And the next question goes to Caroline Look of Bloomberg. Caroline, please.
Hi, thanks a lot, and good afternoon, President Lagarde.
Good afternoon.
I just wanted to draw on your response to Annetta's question on rate hikes earlier and wanted to confirm, are you not willing to repeat today, as you said recently in December, that it's very unlikely that you will raise interest rates this year? And secondly, you were talking about how inflation risks are tilted to the upside, particularly in the short term. but could you give us some more thoughts on the medium term and specifically the assumption that inflation will fall below 2% and stay there in 2023 and 2024?
Okay, so on your first question about interest rate hikes, as I said, I don't make pledges without conditionalities. And I did make those statements at our last press conference on the basis of the assessment, on the basis of the data that we had. And it was, as all pledges of that nature, conditional. So what I'm saying here now is that comes March, when we have additional data, when we've been able to integrate in our analytical work the numbers that we have received in the last few days, we will be in a position to make a thorough assessment again on the basis of data. And I cannot prejudge what that will be, but we are only a few weeks away from the closing time at which we provide the analytical work, prepare the projections for the Governing Council, and then come with some recommendations and make our decisions. I think, you know, it all goes back to how do we make our decisions? We make them on the basis of data. We make them on the basis of the forward guidance when it comes to interest rates. We make them gradually, because we're not here to rock the boat, if I may say. And we are going to use all instruments, all optionalities.
Yeah, Big Toast, you got it right. An iceberg order
but the situation
is a refreshing
has
order.
Indeed changed. And you will have noticed that in the monetary policy
it could be a market maker, it could be a hedger.
We do refer to the
could be any number of
upside
things.
Risk to inflation in our projection. So, situation having changed, we need to continue to monitor very, very carefully.
Looks like they took another dive there.
On the basis of the data. And then we will have to take a judgment. So you had a second question, which had to do with what's my prediction about the medium-term inflation? Well, again, I'm very sorry to say, but we do assess risk to the upside for the near term, particularly for the near term. We're not excluding, but we say particularly for the near term. We will know better what impact it will have on the medium-term
Why are
inflation.
falling off a cliff already here?
But let me just say one thing.
Well, the market is definitely reacting to Lagarde being
and this is so
hawkish here.
In the medium term,
I feel like when the central banks are speaking that the market
that are helping us
more often than not
reach,
overreacts.
hopefully, that target.
So,
and that has to do with the
but the
labor
problem
market
is
that I
it
was
kind of
discussing
sets the
earlier.
sentiment.
That has
Like
to do
everybody
with
in
the
equities is going to want to sell now, right?
Inflation that we have, which concerns more than 60% of the items. And it has to do with the inflation expectations, which, whether based on surveys or market-based, are now heading very close to or at target. So this is all good development. And I'm saying that with a concern, because I know how much hardship it imposes on all of us Europeans.
So we've gotten
and
5
particularly
basis
those who
points
have
so
to fill
far.
up the tank and who have to put food on the table, because it is hard. Prices are going up very much.
Another
at the
one at
moment.
10?
We see them continuing to stay high
well, a little
for a
bit,
few more months,
at least.
but then declining over the course of 22. And then
I'm
our
sure that you'll
medium-term
see a lot
numbers, we will
of big
have more
orders
certainty
at
our March meeting.
4,500 if we get there.
Thank you, Madame Lagarde. The next question goes to Francesco Ninfole of Milano Finanza. Francesco, please.
Thank you. Good afternoon. President Lagarde, could you clarify what is the best way for the ECB to act when there is an increase in inflation driven mostly by supply rather than demand? In the Eurozone, of course, there are significant
LA Mayor Garcetti says he held his breath for maskless photo with Magic Johnson. Grief.
As you've said before. Secondly, I have a question on fiscal rules.
It's ridiculous that we're even having these kinds of conversations.
Of the Italian and French governments have published some proposals on the Stability and Growth Pact. Have you seen them? What do you think of them? And in particular, what do you think of the proposal to transfer part of the ECB, of the government bonds in the ECB balance sheet to a European agency in order to give ECB more space for monetary policy? Thank you.
Well, thank you for your two very interesting questions. You know, I opened this press conference by saying how all governing council members were concerned about inflation numbers, which were at a very surprising level.
They're not backing off on this, man.
Whoever are the projectioners and the forecasters. Of course, we went into the analysis of what is it more supply? Is it more demand? We all know that monetary policy can be
you think panic next week
on demand, and that the impact on supply, particularly if it is
it's very much going to depend on data, right?
The case with energy price increase is going to be more limited. But I would have a little caveat on that one, because clearly the longer it lasts, the higher the likelihood.
That jobs number on Friday is going to be really important, and so far it's not looking good. Like the tea leaves do not look good.
We are all concerned that we have a mandate which is to deliver price stability, which is to make sure that inflation is at target in the medium term, which is the strategy that we have adopted, all of us. And we know the limits of what can be done,
relentless.
When it can be done. But we know that action has to be taken when the conditions.
So I told myself I'm not going to trade this while the ECB is speaking. I'm okay with missing this move. But let's just kind of sit here and think about, okay, how far will it go? So the 10-year looks like it is well beyond like the
Governing Council of the European Central
your
Bank
typical meta order impact, like because the liquidity is kind of pulled over the ECB speaking and everything else.
In the governance of the euro area,
and these guys just keep pushing and pushing and pushing.
As much of a fiscal union as is possible, given that we have a monetary union.
So how can we predict how far it's going to go?
Amply that when monetary and fiscal policy work in intelligent synchronization, it can be very efficient. But I'm not going to pass judgment.
You say the 60 is interesting right now?
Or the other, however respectable the authors
I kind of have that covered up. You want me to make it so we can see the dollar here?
That we would
we'll bring
like
the
to
euro,
see
make it a little bit bigger.
Simpler,
euro's getting stronger.
More user-friendly, that provide for counter-cyclical response. And we have also said that we believe that a fiscal capacity would be
That's probably just
in order to respond
the European currency crawling back some of the losses that they had from when, the U.S. central bank commentary was hawkish.
The decision will ultimately depend on what the leaders are prepared to compromise and are prepared to accept. From our perspective, the more
you know what else? Another thing that's really tough about this in the 10-year
the better for our monetary
is, they have such a big hole left behind them. I wouldn't surprise me if they snap all the way back to 24.
Financial Times. Martin, please.
Hello, Madame Lagarde. Can you hear me?
Yes, I can.
We are getting a little bit more absorption down in this area, though.
In December, I'm going to ask it again. Forgive me, but do you think the market in pricing several rate increases this year by the ECB has got ahead of itself? And secondly, can you tell us what your view is on the impact of tensions between Russia and Ukraine on the economic outlook, and particularly the outlook for inflation? Thank you.
Well, thank you very much. I don't know what answer I gave you to the December question, and I might be giving you a similar answer, although it will be in the light of different indication from the economic situation, and certainly different inflation numbers and different labor market numbers. But when it comes to interest rate hikes, we have a forward guidance which has been approved by the Governing Council, which identifies three pillars or three criteria, if you will, that need to be satisfied in order for rates to be hiked. And I don't want to insult you by repeating those three criteria, but I will, actually. So we have the inflation at target, which is 2%, well ahead of the projection horizon. We have, second, the durability, so that we see it staying at target until the end of the horizon. And third, we need to see underlying inflation that is sufficiently strong to determine progress towards target. So we will apply these three criteria at each and every step of the way, and we will determine if and when they are satisfied in order to
Italian 10-year yield up 17 basis points. Wow.
Hike rates. But
Italy downgraded to bankrupt again? Really?
And the sequence is that we will not...
Wait, I don't know if that's a joke or if that's serious.
Until we have completed net asset purchases. So I think, what comes first comes first. We have to look at net asset purchases. We are conducting a step-by-step glide of those net asset purchases. We will determine in March what is the assessment, what on the basis of the data that are then available, and we will see what pace, what speed, what amounts we will apply to this net asset purchase programs for the rest of 22.
Okay, so that was a bounce, but that kind of looks like a falling back into a liquidity hole more than anything.
Take a political stand, but I will simply say that the geopolitical clouds.
And same thing here in the ZN, right? Like I was saying, it wouldn't surprise me if they fell all the way back to 24.
Have an impact on energy prices. And through energy
now,
prices,
interestingly enough, really big increase in rates here, but gold is not moving.
It will also impact growth.
Nor is Bitcoin, really.
As a result of reduced income and possibly, as a result, reduced consumption and deferred investment. So the pure economic impact would be certainly significant than what we are seeing at the moment in terms of prices. So we are very attentive to that. And by the way, we include that in our scenario when we prepare the projection and the work that is submitted to Governing Council members at the time of the next Governing Council meeting. I will say separately that peace is a lot better than any kind of war from an economic point of view. And I've seen that in other parts of the world in previous lives.
Thank you, Madame Lagarde. Next question goes to Mark Schreurs of Börsenzeitung. Mark, please.
Yes, hello. Thanks for taking my questions. The first one is on inflation. You mentioned several times now the upside surprises in inflation in December and January. Does that mean that the December projections from the ECB staff, that they are already outdated, especially the projections that inflation will fall below 2% in 2023 and 2024? And my second question is on the degree of monetary policy accommodation. If inflation is significantly higher than expected, this means that...
It's never annoying when you guys show me how you're doing. I love that.
Policy is
I might not necessarily respond because I don't necessarily know what I'm supposed to be seeing.
And to tighten monetary policy. Thank you.
Well, thank you for your two questions. On the latter one, it's obvious that monetary policy has to continue to support the economy. And you mentioned it yourself.
Let's pull it over here and look.
The whole panoply of instruments that we use that are currently working is also explaining some of the good results that the economy...
Did you take it off of the iceberg?
On the... upside surprise.
You took it short hitting into it, expecting it to be there.
We did not only use the word upside in relation to surprises. We used it in relation to risk. Risk is to the upside in our projection. we hardly ever, I don't know, I'd have to double check in the last 20 years, we may have in the past, but in the recent past, we have not actually
That's not too bad. I don't know if that would work during regular market hours, but in that situation, that was a good call.
Characterization of risks in
Just
relation
expecting
to
there to be something big there and hitting into it.
Is a very
and then getting out as soon as you saw the stop run. Often when I see something like that, I always want to try and make it run.
What we had expected over the course of the year.
I don't know. I've become longer and longer term, and
at the end of the year, so
probably
risk is to the upside,
have lost a little bit of my grounding. You know what I mean?
Thank you, Madame Lagarde. And the next question goes to Johanna Träg of Politico. Johanna, please. We can't hear you, Johanna.
Can you hear me?
Yes.
Great, thank you very much. I've got a quick question on your March projections that you've highlighted now repeatedly. If those updated forecasts show inflation exceeding your 2% target in 2023 and 2024, would then, in your personal view, that be a reason to start slowing bond purchases earlier than currently suggested? Thank you very much.
Well, thank you for your pointed question, but I'm not going to speculate
letting run such kinds of trades
on what the governing council will decide.
I
think you have the answer, but I'm not going to here speculate on
when I take a trade like that, it's because I think that the price is going to go a lot lower.
Stumpf of Expansion. Andres, please.
I might get extra viewers when Matt goes on vacation. Then maybe.
Yep. Very much so.
I was wondering, in light of these new events, that
I don't think that my stream provides the same kind of
could cause
the entertainment that his viewers are looking for. You know, might be wrong, but I don't.
Teltros at all.
Don't think it's the same kind of a viewer. Yeah.
And it's one of the items that I'm sure we will debate at our March meeting or later, actually. Because I think they continue. They end in June 23, if I recall. Huh? Yeah.
Thank you.
Captain Price
agrees.
The
next question goes to Mark Boinderman of NSA Handelsblatt. Mark, please.
I have noticed, it does seem to me that the competition has gotten higher and that the views on the stream it's been harder to get the views on the stream.
Just to be sure, does it mean
we did recover
a little bit
decision
taken today was
through the month of January, but
unanimously? And my second question, if I may,
Matt trades too fast and loose. Once I started reading order flow, I've been watching you. Thank you very much.
The risk of rising bond spreads determine the pace of
it's the price action thing, man.
Of monetary policy of the ECB, especially given the fact that the sovereign debt has exploded so much during the pandemic. Thank you.
Thank you very much. I think I said that there was
you gotta get more comments on
around the table about
the VOD videos are doing just fine.
Fellow Europeans. Equally, there was general consensus about the outcome of our decision. I wouldn't call it a monetary policy decision, so to speak, because
I think one of the problems that I have is that the information that I'm sharing with you guys is stuff that is really nowhere else in the retail trading space. So what normally happens is you give a video full of kind of general advice like that, and then everybody wants to say something about it, whether they agree or disagree with you, or they think you missed something, right? Well, when it's something that is just so absolutely new, you know, it seems like that there's just not as much to say about it.
On these issues around the table, I can assure you.
So I think that's part of it.
You asked me a question about the spreads.
But ultimately, I want to pivot.
That we are not seeing any such development. And while yields have moved up, spreads have not widened in any significant manner. So we
he
very
needs 2 to 3K of drawdown that turns into a $500 profit and calls it a good trade.
And we have no reason to believe that it is going to be different. And if it was, we are obviously.
Well, I really wonder though if how well his viewers understand that what he's doing is taking on excessive risk, right?
Thank you.
Like you can come down, you can go in here and like double, triple down on a trade and then make a teeny tiny little profit, and you can get away with that for a really long time. But then the one time that you don't get away with it, you blow your account.
We cannot hear you, Klaus Reiner.
Can you hear me now?
Yes.
Oh, I'm sorry. Good afternoon. Thank you very much for taking my question.
YouTube algorithm doesn't know what to do with your content? I don't know.
Energy prices. If I listen to you and your colleagues,
no, I don't think it's that, Jack.
That energy prices is something central bank can't do much about it.
Well, let me show you. After the ECB press conference is done here in 10 minutes, I'll show you guys why that is.
On the other hand, one could argue that the current policy.
You think that most of his viewers are there because they want to see red? Well, it might not be too different from here, though.
And
yesterday, it was so frustrating to me. You know what? It wasn't like a devastating loss to me or anything. I could lose like that, like 20, 30 times in a row or something like that. Actually, no, it's not that. I could do that 12 times in a row and still have the account. So it's not that, but it's like the burn rate. It's like,
I hope you won't just
well, I can't do that so regularly.
But what do you say to this criticism? Thank you very much.
Well, thank you very much.
When I first saw the way he traded, it blew my mind that he was actually profitable as a strategy. It's 100 pips. Well, is it because he's pushing against momentum, right?
Caused by energy prices, oil, gas, electricity. And they all interrelate, gas having a stronger bearing than in previous years because of the price mechanisms depending on the length of contract and all the rest of it. I will spare you the details. But 50% of the current inflation is caused by energy prices. If the ECB was to, first of all, reduce and finish its asset purchases, then raise interest rates in short order, do you think it would have any?
Not everyone understands what you're doing, and for newbies, it is confusing, and they prefer more comfortable things. That's what I think.
In the ambit of monetary policy, to decide the price of the barrel that is organized predominantly outside of Europe. Now, true that most of those contracts are in US dollars.
Like, what would happen is if I just changed the stream to not show any DOMs?
Appreciation, depreciation,
what if it was just one big chart?
A little bit. The euro has depreciated a little bit. I don't want to, be in the wrong numbers, but it's no.
When you trade with money that's not yours, it's a win-win.
12 months. So I don't think that we can attribute to the European Central Bank the high cost of energy.
He guesses that his YouTube income is the only reason he can still trade. Well,
inflation and
I mean, I'll admit that it would be very difficult for me to continue trading if it wasn't for YouTube.
And its governing council at large are focused on its mandate, which is price stability.
Put
we're going to
a ton of my own money into it, but like that just kind of becomes harder and harder to justify.
That is set by the
it was like I was saying yesterday, like one of the things that I find really frustrating is even when I have like the best information and you have something that you know works, doesn't necessarily mean that you yourself can pull it off.
We will act,
and it's kind of hard to justify the amount of effort that you put into it, right?
Next question goes to Isabella.
We have a bigger goals here than Seth make a ton of money.
Thank you
from
for the
futures trading.
Right? President Lagarde, I have two questions. The first question is on the lower bound. If inflation were to be too high relative to the 2% target, the ECB would respond. And your response will come from the lower bound.
Captain Price thinks that just a chart would bring more views.
Exceptional. Can you tell us how the central bank, the ECB, can respond to higher inflation coming from the lower bound? And my second question is on your step-by-step
Certainly, if we
approach.
started talking
The
about
Governing
stocks, we would get
Council,
more
expects
views.
net purchases to end
We might start doing that at some
before
point.
it starts raising the key ECB interest rates, and that is APP net purchases.
The reason I haven't done that as of late is because I simply do not have the time to put into both generating the content for you guys here and the stock research.
By hiking interest rates.
There you go. The only person who cares about making money is me. I'm here to get better at order flow and reading the spread.
Very sophisticated, determined approach and analysis to doing that. And we will only do that in the sequence that we have fixed for ourselves and which has been agreed, which is that we will look at net asset purchases first, gradually, okay, on a data-dependent basis. And then we will look at interest rates. Now, you asked the question about net asset purchases, and I'm not sure exactly what your concern was about the net asset purchases and what is the what was the question?
Just putting GME AMC in the title would bring. Well, it did when that first took off. We had tons of viewers from it,
a little shorter,
but they didn't really stick around.
And that again,
really
is going to be in the estimation of the Governing Council, data dependent and based on the assessment that is conducted. But I would say this, we are not there yet for the reasons that I have just mentioned, which is that we will be very faithful to our sequence. We are still conducting net asset purchases. We will stop the pandemic emergency program net assets in March. And then we will look at the net assets under the APP. So don't assume too much in terms of immediacy of hikes. We will not be complacent, but we're not going to be rushed into a process. We will follow the sequence that we have set for ourselves. We will verify the forward guidance criteria, and we will be gradual in whatever we do.
Thank you, Madame Lagarde. And today's last question goes to Jean-Philippe.
Missing a cool stock scanner for Ninja Trader is not that something for a programmer.
Jean-Philippe, please.
Ninja, if you want to trade stocks, Ninja Trader is probably not the right platform for you, right?
Good afternoon, Madame President. It seems very crucial to avoid the so-called second round effects in the setting of wages.
We're watching the ECB press conference. There's only about 5 minutes left.
Going on the street and to defend their purchase power, especially in France. Would you go as far as to call the unions to wage moderations in the coming period?
Yep, European.
Second round effects, which are not yet there.
Italy bonds are getting. I wish I could show them up here. Italy bonds are up. The interest rate is up 13 basis points. Oh, and the market is like cratering off of it. Yeah, it's been very impactful this time. Hold on a second.
They are only independent on the paper, and for that she said that the level of public debt is so far so high, then the central banks are so hesitant to act. Here. What's your take about this? Thanks.
Well, on the latter question, I have not seen what Carmen has written, so I'm not going to comment on that. She's an expert on sovereign debt, and she has held that view for a long, long time that excessive sovereign debt is a great burden and should be addressed by sovereigns. So I'm not going to challenge or second guess her analysis. I know this is her field, and I'm not surprised that she's addressing that in her capacity as chief economist of the World Bank, and clearly, I'm sure, focused on emerging markets and low-income countries. On the second round effect, don't get me wrong.
What are we at on the yield in the 10-year, by the way?
We are not seeing
still
wage
1.85. Interesting.
That would be likely in the conditions of the markets.
A decent amount of steepening in the curve here again.
Unemployment as low as it has ever been, where we are seeing participation back to the level where it was pre-COVID, and where, gradually the output gap is closing and there is less and less slack.
We should trade the 5-year more often, right?
So
this is where the strongest move was
in
the 5-year
movement on
and look,
wages.
absolutely no volume on it.
Of course, is to make sure that through a second round,
I'm sure that if I started taking trades in it, that you would start seeing more.
By monetary policy, inflation would run out of control and would spiral. This is not what we are seeing.
Yeah, I don't have access to Eurex.
But I'm not here saying
would be useful.
that there should be wage moderation. There is clearly an adjustment to
One of the problems is you get to a point where you find all sorts of pieces of data that can be useful and you can have an edge, but you can't really take advantage of all of them. So you kind of have to start picking and choosing which ones to pay attention to.
And by
that's why I'm like, you know what, the dollar index is probably one of the most important things you could look at. So we made that.
Constant comparisons between the US and the euro area, the Fed and the ECB. We are really operating in different environments with different economic data. Just to give you an example, our demand here in the euro area is pretty much back to where it was pre-COVID. In the US, it is 30% up.
Yeah.
Ask yourself why. Because of this massive fiscal stimulus.
Thank you, LaGuard.
The euro area where it has been more moderate, not excessive.
The central bank giving the whole game away, saying the thing that nobody in the United States media wants to say. Yes, the reason that supply chain issues exist is because the United States put in an extreme amount of fiscal stimulus, which increased demand 30%, 30% higher than what it was pre-COVID. 30% higher than what it was pre-COVID, and that's causing the problem. Yeah, and nobody in the U.S. ever says that. They're always like, "Well, it's because companies are charging too much." Okay. Now, so let me show you something here about this channel. I want you to see this. It's kind of weird to me sometimes. We're talking about how the channel is doing, how can we make it better and things like that. But I think it really matters because, I want to make the content that you guys want. And, I want to make this channel more and more successful because I think that we have important messages to get out, right? So when you come over and you look at my channel to the reach, so this is the last year. Wow. 2.4 million impressions. 2.4 million people have seen my face in a YouTube thumbnail. Okay, but where is the majority? Well, not the majority, but what is the biggest contributor to my traffic? Right there, YouTube search. So you see, we've done very good at getting traffic through, particularly for our order flow series, right? And for education and NinjaTrader programming. We've done really good with NinjaTrader programming. I don't know what more content we would make with NinjaTrader programming, but we've made some really good videos for that, and we ranked really high for that as well, right? So that's where the people are coming in. But something that I don't understand is when we come over here to the live stream. So you can see here today, right now we got 37. So it's actually pretty high today. Thank you guys for tuning in. But like the number of playbacks total 137. And I don't know, does that mean, is it because some of you guys come in and have to refresh the page, or whatever the deal is does that create some of the playbacks? Or is it really that out of the 33 people watching, there was 100 people that came in here and then left, right? Because if it's that, then that would mean that, hey, YouTube is actually sending a lot of people to our stream, but they're intimidated or they're bored by it and they leave, right? So if that one is the case, then hey, just showing a chart wouldn't necessarily be so bad. And you know what? I suppose we could do that now. A big part of what we're doing here is like just having the replay available so that you can watch the order flow back again, right? And I think a lot of people use that in the beginning. I don't think that quite as many people use it anymore, but I think that was a big factor in the beginning. But now it's kind of like, well, but you know what? You have like plenty of videos to go back and watch if you want. And it would be nice to just, to be able to take trades in the stream, not necessarily know, so that I don't have to worry about anybody trying to front run or follow the trades or whatever the deal is, right? Because I think that the larger picture is that we need to pivot a little bit, right? Like the original thing was NinjaTrader programming and order flow, and we've done that very, very successfully. And now we want to get out our knowledge about market inelasticity and market microstructure, and basically some of the reasons why technical analysis ends up not being predictive, right? I think those are important things to get out. But then the kind of the big conclusion that we get after knowing all of that is that we need to be informed, which means that like we need to follow the news, we need to analyze the news, and what's going on there, right? So that means that we need to pivot to doing more news, which means that speculator stuff becomes a little bit more like watching CNBC, but much more focused towards what is making the current orders come through right now, right? Make your pictures more appealing. You need better colors. Oh, okay. Well, so that is a key thing is that probably the biggest thing that's going to help. So like, and that was kind of where I was going with that. Where does the traffic content come from? Where we are getting our viewers are from people that are doing futures trading and are doing order flow and want to learn more about it. So we're doing good there. But where do YouTube channels go viral from? They go viral from people seeing the thumbnail on the front page and just they can't resist clicking it, right? Which usually means a really good clickbait title. So far, they're on the Open ES. Doesn't look too bad. I kind of wonder if the worst or the worst of the downside is over, and that this just ends up being a try to close the gap sort of a day. Yes, do that, but make it really easy to understand. Exactly. Yeah. That's what we got to do. That's me clicking fool. So we can see one of the things that happened was that when we changed our thumbnail and it was a little bit better of a thumbnail, we did start getting more clicks. Yeah. Something you can do that really helps is if you have a really big number on that thumbnail, but I'm never going to do that. I don't think that is socially responsible to do that. So I think that it would be socially irresponsible of me to try and build my audience by luring people in with the promise of large gains. Yep. Your viewers are the small percentage of traders. If you aren't flashing big P&L numbers on the screen, most won't be interested. Just ask. Oh, but there's channels in stocks that have done quite well without flashing big numbers on screen. So we can do it. Oh, come on. But I mean, look, first of all, I'm not making thousands of dollars from doing this, right? I suppose I could try and do a combine. I don't know if would be a little bit of work, because I for so long have been in the mode of I want to take on less risk than that. Well, shall we try? Flashiness is nothing about responsibility. It is, but that's the thing, is that I think that I can build my audience from here on out by talking about the news, And so the YouTube Shorts it seems to be having some effect. You know, we get like 10 subscribers a day or something, which is actually like really good, right? But you have the knowledge, yeah. But I don't know if I have the stomach for it. You can tell that when I start taking a drawdown, it really irks me. That's kind of where it comes back to, like, well, I think we have pretty good evidence to suggest a certain way of trading, but that doesn't mean that Seth can pull it off, right? I might be really knowledgeable about it, but I don't think I have the bankroll or the stomach. I mean, if I had a $20,000 account and I was just trading 2 micro contracts, then maybe it would be different. You know what I mean? Oh, here Salim sent me what he made. Oh, that's okay. 360. So the E-mini is just pretty good open so far. Bonds aren't backing up at all. Just talk about risk mitigation, yeah. but I'm also not gonna put a number in there that I'm not actually making. You know what I mean? Like, I'm not gonna come and trade sim and then say, oh, I made 10,000. You know, that wouldn't be honest. Yeah. Consider the age and sentiment of most viewers getting into trading today. Millennials wanting fast cash, not so interested in macro. Well, but I actually, well, maybe I'm wrong, but I think that the potential audience out there for macro and business news is potentially larger than the audience for millennials that just want fast cash. I think that there's a mob of people out there that are sick of this bullshit, that are tired of having NFTs flown in their face and clickbait all of the time and so forth, and they want something that's real. They want something that they can actually trust instead of just trying to be FOMO'd into everything, you know? It's that, especially with the way that GameStop went and all of that. Don't you think that people are just tired of it? It has been the age-old thing. Almost every new trader comes after fast cash. Yeah, maybe. Don't talk about how much you're losing. Truth is, people don't care about that. Yeah, it's true. That was probably true. But those people are watching Dave Ramsey and CNBC. Yeah. Well, on YouTube, they're watching Graham Stephan, right? So what do we want? We want Graham Stephan viewers that want somebody that's a little bit more detailed, right? So I'm not going to get as many viewers as Graham Stephan, but I'm going to, you know, it's the same audience essentially, or it's a sub portion of his audience. It's a pretty sizable sub portion of his audience. But I don't know. Like, the other thing, guys, is let's not worry quite so much about what seems to work on YouTube, and more about what you guys want and what you think helps you the most, you know? Because, you know, that's just where the thing that I come back to is that trading here, like showing my trading live, whether it's live or sim, is really more a means to an end, right? It's not necessarily about, I think that I'm going to make a ton of money from futures trading. It kind of seems to me that if you take on a lot of risk, you can have some really good runs, but that ultimately it's kind of a time sink. But it's something that we have to do to understand what the market is and to find the community that we want, right? So what helps you guys the most? But you were saying understanding the news and how that's affecting current flows in the market and understanding that fundamentals don't necessarily move price, but orders move price, that's what I think is the most useful to you guys. You already enumerated that. So how do we expand that? How do we make that better, Just need one good trade can make your, that's true live action. Like yesterday in net, I did make money, largely because of one stock trade. Like we took all of my trading activity, it was money. If it was futures trading, I lost. But if it was all, then I made money because of one good stock trade. Frustrating because I refuse. One of the things that happens a lot is that the times where I decide that it's just too much risk for me to try and trade that event could end up being some of the biggest moves, and so you're just kind of left scrambling for scraps, right? Does discretionary retail trading still exist? Does manual scalping still profitable and manageable? Does HFTs and algos let us make money? I mean, I don't know, dude. Jeez, I really don't know. I haven't seen this person. This person that regularly has made money every year for the past 5 years, and they're discretionary trading futures. I haven't seen it. And it does kind of seem to me that like the consistent trade is the market making, and that the robots dominate the market making. I hope I'm wrong, but that's just what every piece of evidence that we have. Graham Stephan flashes big numbers in his thumbnails. I think he does, but I don't know if that's why he built his audience per se. The stream keeps you calm. Oh, I appreciate that, CD-ROM. Sometimes I don't feel calm. Yesterday I did not feel calm. I was so frustrated. I think I'm over it. But the reason I'm over it is because I got to keep reminding myself that this is all just a small part of a larger plan. I'm a little concerned, to be honest, with myself, because the burn rate from this past week was too much, right? Like, I don't want to have to put in more money just so that I can even have data, right? So we can't have too many days like yesterday. But we don't have to win all the time either. As long as we're, doing a good job, we're learning stuff, and it's helpful to you guys. So, but we're making inroads in some of these things, like the daily recap, the funny daily recap videos on TikTok have really helped. Now, the last few videos on TikTok for some reason stopped giving me views. It was like the first one was like, 10,000 viewers, and now it's only giving me like 200, and I'm like, what the heck, TikTok? What the heck? Well, maybe it's because the audience is already bored of it. I don't know. We need you to say it's difficult to trade debunking the lie. It's true. There's a lot of people out there saying that, though. There's a lot of people out there saying, hey, just put your money in an index fund. I think there's a problem if everybody puts their money in an index fund, but they're not wrong either. You're probably going to make more money if you put it all into an index fund. Sure. Should we need to learn coding or computer programming skills to get a better grip on trading? Hope you'll give your valuable time to elaborate me on this topic. Yeah. So I think yes. I think that if you're going to do this, that going and watching my basic videos about NinjaTrader programming and trying to program your own basic indicators, or trying to pull up my stats indicators and trying to make your own stats is probably a necessary skill. And in fact, in order to really be successful with this, probably you might need to be doing programming even more sophisticated than the stuff that I've done. It looks like machine learning is probably a space that could be really useful to us, and I need to learn more. I mean, I learned basic algorithms in school and stuff, but I've never used tensors and all that stuff, and I still haven't really gotten into it. Been relaxing at home a little bit too much. You know what's been happening to me this week is like allergies, man. Ugh. Like, you know, my eyes have always kind of watered and they're always a little bit red. I think they're doing okay right now. Like if I zoom in here, I think we're doing okay. I could maybe turn the lights up a little bit brighter, don't you think? Shall we do that? Which side here is... And turn the ring light on a little bit more. Do 30. Yeah. Anyways. Yeah, you can't see the bloodshot eyes quite so much. Try Allegra. Well, yeah, so what I was gonna say is like my eyes have been watering. And it was really starting to bother me because it's basically like if I sit down on the couch, I'm just dabbing my eyes the whole time. In this room, it's better. So it must be something like dust, because in this room I can control it and I feel great right now, right? But when I'm out there, and then like yesterday or the day before, I started sneezing too, right? And you know, at first I just thought, oh, I'm sneezing. It's a little bit of a shock to me, because you ever watch like videos or there's cartoons and there's that one guy that's kind of a little bit of a wuss and they have allergies, you know, and they don't want to trigger their allergies and all of this sort of thing. And yeah, I feel dumb like having allergies, but it was like freaking debilitating the other day. Like I just couldn't stop sneezing, couldn't do anything because I would just kept sneezing and like my nose, like there was no snot. It was just water just dripping out of my nose. Just dripping out of my nose. What am I supposed to do about that? So I went yesterday because my mom, she's always had allergies, and talked to her about it and took a Claritin. I took a Claritin. That seems to have helped. But I'm not too sure because part of it has been that I've just been sitting in this room avoiding going out there. So, and I didn't work out yesterday because of that, and then I need to get more propane for my heater in the garage. So I feel like I'm getting soft, man. And then I could be spending that time reading more about statistics, which is kind of my current learning project. But I'm not. I'm just like too pooped out. Liquidity holes. You said liquidity holes were your second favorite topic, but they're easily your most favorite. No, I mean propane and propane accessories. Yeah, I just need to go down the street and get a new tank. But oh my gosh, so another thing that happened to me. I feel so bad about my current state of fitness. I mean, it's not bad, but it's not great. Like I feel like I should be like this paragon of fitness and whatever. The propane tank, like when it gets to the end of the tank and the burner burns that off, it's like it does something different, because that stuff really smells. It really smelled. I couldn't stand even being in the garage. But I need to go and refill it. Okay. You know what? I got to speaking so much. I was thinking, hey, let's try and take a risky play on the ES, but it's probably too late to do what I wanted to do. Well, we can take one there. And maybe I can still sort something out, but it'll have to be way more degenerate to do it. I thought that it would be worth fading that first upside move, and it looks like it indeed was. But, you know, if I had a position built up around 45.25, then we'd probably be okay. Trying to build it around 45.10 might be a little troublesome. And from what I hear, LP tends to do that when the tank gets low. Yeah. Facebook is getting annihilated, and I love it. Oh, well, right, Uzi. You know what is so weird to me about this Facebook thing is like we've talked about it here on this stream so many times, right? I'm like, I don't get the Facebook play. Like a lot of people were saying, oh, Facebook is such a good play. Like, look at all of these metrics and everything. And I'm like, nah, I'm not. Nobody likes Facebook right now. They're going into this metaverse thing that I'm not really sure you're going to get the kind of payout that you want off of it. You know, it is just, I don't get it. I don't get why. And like Michael Burry was like really, really into it, right? Remember that? Michael Burry was really, really into Facebook. And it's only now that like the reality dawns on everybody and Facebook gets destroyed. It's funny that none of these $1 trillion tech stocks pay dividends. Well, some of them might have to start. Some of them might have to start if the era of easy growth is over. But the dividend can screw you over too, like it was with AT&T when they had to reduce their dividend. By the way, did you guys take a look at the carnage in PayPal yesterday? That was another one that I was kind of like, well, I'm a little surprised that PayPal is doing as poorly as it has been, but it kind of looks like a lot of people are creeping in on their space, and since they don't have, you know, exclusivity for eBay, not surprised that they're getting creamed. But they really got creamed. And part of the thing on that one was that Jim Cramer was really, he owns it in his charitable trust. He had the CEO come on and he said very favorable things about the stock when the CEO came on. And then it comes out and they were just like completely blindsided. Completely blindsided. Okay, so we'll take one if they push through 10 there, okay? But at least they pay something. That scenario beats holding $3,000 stock for nothing, yeah. But the thing with the dividends too, you got to remember, Uzi, is that everybody has caught on to the fact that the impact that you have when you buy your own stock, the impact, you know, orders move markets, that is better for the stock than the dividends. Like, frankly, the only reason to have the dividend is because, like, that's the way it's supposed to work, you know? But otherwise, unless the government changes something, probably dividends will be less common than they were. But I do think so some of the techs may, if we really start to get higher interest rates and that could really weigh on techs, then they might start turning to having dividends. When a crisis rages, everything is gone anyways. That was just kind of like a little tangent there. Oh, I'm just even now my nose, I'm gonna sneeze here. It's like something got in there and it tickles so bad. And it's like completely dry in there. I don't know why it tickles. You see an iceberg at 05 again? Oh, right. Yeah, maybe. You know, when I come back and I look at these, there hasn't been too many big orders in the treasury, which is surprising. There hasn't really been too many big ones, big level 2 changes in ES either. I think that this is more at their like current conditions right now is low liquidity market order driven market. You've been trading the 10-year lately and you like it more than 30? Really? That's a change. I sure like it. Oh, okay, so we're pulling because we got the news here. Totally forgot. We got the ISM number here. About 30 seconds. Yeah. I don't have forecasts for any of these numbers, though. Well, only for U.S. durable goods, they're expecting negative spot 9.
10 seconds. $59.9, 59.9. That's higher than the forecast of 59.5. We do have the US factory orders month over month coming out at minus 0.4%, minus 0.4%, in line with the forecast of minus 0.4%. US ISM non-manufacturing prices paid 82.3, 82.3. US ISM non-manufacturing.
So US ISM non-manufacturing employment was 52.3.
US ISM non-manufacturing.
S&P 500.
52.3, 52.3.
A little bit mixed, but there was some aggressive sells.
And US durable goods revised minus 0.7%, minus 0.7%, higher than the forecast of minus 0.9%.
Did you hear a police siren in the background? I think you were just hearing some, like the door opening or something. Oh, you heard that siren was the sound that Financial Juice makes. Okay, I need to turn that off, huh? I hate, so something that I hate, oh man, this is so funny, is that siren won't go off if you don't have the tab open. So like later in the day, you'll switch back to that tab to turn the squawk off, and then you'll get like 5 of them go off at the same time, and it's really loud. Yeah, that's what that was. That's funny. I really, the thing about the 10-year is that you can really tell what's going on because of how thick the liquidity is. I have to say, when you're starting out learning order flow, you just got to watch the 10-year. And that's why in all of the videos, I gave everything from the perspective of you were trading the 10-year. Just because it's so simple to understand when it's all happening at one spot. Versus the yes, it's across a wide range and over a more diffuse time period, and it's a little hard to sort out sometimes. That's a pretty good bounce right there. I will take okay. That way, if we come back to here, I can kind of sort out a better position. Some sequential profits. Well, that was a good move there, but it's tailing. It's going to leave a very... This is an important trade you're in. Why is that, live action? You think that it's going to be a good trade? I mean, it's sim, but I'm pretty levered up right now. Should probably be more nervous than I am. Even like when I know it's sim, it's like when I start putting contracts on it, like it really makes me nervous. So I've kind of seen some strong impulses both ways, but they're still kind of stuck around 45.10-ish area. You can see though that in the profile that below 10, there's, the volume profile kind of trails off a little bit. So we'll see. You kind of see it. There's this range between 45.10 and 45.15, and then most of the volume has been happening at the edges of those, which is kind of interesting, right? It's like this double hump. So they're trying to break out one side or the other, and they can't seem to make it. It's a good example of these buzz wheel when price spins with large fighting both sides over a couple of ticks, often a sign of reversal. Well, looks like so far the trend is in favor of the buyers and doesn't look good for me. Oh, we did, by the way, we did finally see gold take a hit. It wasn't until like just before the ES opened though. Market makers will just play. Yeah. Well, that's what I'm kind of trying to do here. Is I'm trying to use this range. I might need to just take one there. I think my working theory here is that the sentiment is such that it will be a mostly negative day, but we do have to be careful, especially later in the day. Like if I take this short, this is not a short that I think I try and hold all day, because I don't want to bet against Amazon, right? Facebook catching a bounce. You see the 10-year there go to a new low. Okay. Well, we're just kind of taking a gamble here. We just let it play out. Might be a bad trade. Yeah. Oil's bouncing here. I don't know. Does appear to be a little bit of supporting volume here for the buyers, but they are cutting through it. You thought it's half an hour. What do you mean by that? You get EAA natural gas at the bottom of the hour. That might be an interesting number given, what's been going on in Europe with natural gas. What's John Grady saying here? Interesting moment about 4 minutes ago. 10,000 contracts traded between 45.05 and 45.0550 in the ES. Buyers hold, and a bounce occurs. It might go after ISM, but that's the definition of absorption. And to 45.17 after the number. Imagine that. Okay, so John Grady is kind of catching on to kind of a similar thing that we are, that there seems to be a buyer absorbing between 45.15 and 45.05. Why is there nothing at ISM number? What do you mean by that? Oh, why was... Well, I mean... Okay, so first of all, this market is very sensitive to central bank talk, just in general. Okay, so that's definitely the thing right now. It's not always going to be the case, but right now, markets are probably going to react more to anything that a central banker says. Okay, with the ISM, the market makers definitely pulled. I mean, the treasuries did the full pull, right? But they didn't really take a decisive direction after it. I don't think that the ISM numbers really had anything too surprising or big in it. So Nassim Nicholas Taleb retweets, correlation doesn't mean anything unless you've seen a graph. Pretty sad civilians in Ukraine doing military drills on the streets now. You're right, Nasdaq Killer did. Well, I mean, there was like reactions to it initially, but in the end, it's just kind of it's noise. It's noise, yeah. Because but look at the number and like what the expectations were. I don't think that there was a lot of forecasts for those numbers, anyways. Right? We'll bring it over here. Okay, so today is Thursday, ISM. Oh, okay, so the forecast was 59.5 and we got 59.9. The factory orders was in line with expectations, right? So does that suggest that we should get a big move off of it? Yeah. I mean, if that number had come out and it was 49, then that would have been a really big move. Right? Okay. Sellers starting to have a little bit more success here. You need to watch this here and see if we get anything fishy. I do see some prices that kind of look like they might be absorbing. You don't want to be surprised by the lack of volatility. Well, yeah, but you remember you got to wait for the number, right? And see how different it was. Yeah. See, the seller's making some inroads, but then the buyers hold it. There does appear to be a substantial amount of buyer demand, I guess you could supply in this area. Wow, now that candle was a really big deal. Jeez. If these sellers can get it below 12, that might cause some trouble. Could you show us day trader peasants from where you are short on a chart? Sure. Let's see here how I do this. Not very good. It's not a very good position, I tell you that. Or are you talking about in the 10-year? I don't know if I can show you on the 10-year. Will it show me here? I might need to change. Oh, no, I can't. I can't. Not for that one. Because I'm using this is on a Jigsaw Sim account, so NinjaTrader can't see it. In the 10-year, that was the 15th. Oh, it does. It sounds like you do want the 10-year. Okay, so if I come over to this chart, I started getting into it here. So I got into it here, went against me for like 2 days, and I added onto it. And then when this one happened, I took a little bit of profits, I think. I think I took one contract off. And then I think I took another one off over here. And then since then, I've just been letting that last contract ride. So that's how I did that trade in the 10-year. I knew based off from here that like, okay, interest rates are definitely going to go up. This move up here, I'm still a little bit perplexed. I was kind of like, that was really frustrated because I wanted to be short micros. I just wanted to be, long micros and just hold it, and I couldn't get it. And I gave up and I said, well, we would just do it on the sim account. But then in the end, if I had started doing it on this day in the micros, I probably could still be short. Oh, well. Oh, well. Wow. That is that's a pretty good bull run right there. It's not quite to the regular session high yet, though. And it's to the 25 area again. I'm surprised that my other order down here at 10 never got hit. So that's kind of interesting. I'm just going to average down like a complete degenerate. It's a nice trade. Yeah, well, this is a problem though, right, Lucas? Is like the way that we've been talking about that you need to be an informed trader. We definitely have some really strong evidence that I think supports the idea that that's a good way to trade. But can you take advantage of it? Can Seth take advantage of it? It seems like Seth has had a very, very hard time really truly taking advantage of it, hasn't it? I've been finding it hard, and I think that part of it is that like I'm probably not as well capitalized as I need to be to really do it. I think I probably need like 10 times the size 10 times the account I do. So I don't know. I don't know what to do about it, but we're just gonna keep chugging along here. Okay, so that's interesting. So there was a pretty strong sell impulse there. I'm not seeing absorption in this location. I'm just seeing like buyers just kind of peter out and then a big seller come in. That sort of thing can lead to a reversal, but let's just see. Sometimes the buyers just kind of sandbag, This Bach range thing ain't fun. Well, this may well be like a gap fill up move kind of day. The only reason I went short was because given the situation, I thought that the short end would be much more fun. But thought that's a pretty good bet that Facebook and the ECB drag the market down, and if that's what does happen, there could be a little ugly in the S&P 500. But so far, it hasn't been running off. According to officials familiar with their thinking, the governing council agreed at Thursday's meeting. By the way, when they say according to officials familiar with their thinking, that means that it was a member of the ECB council that wants to remain anonymous. The governing council agreed at Thursday's meeting that it's sensible not to exclude a rate hike this year. An end of bond buying under the AAP in the third quarter is possible. Despite the sell impulse here, price is sticking around 45.25 pretty well. Oh man, Karen Finerman, a couple of days ago, I am long Facebook into earnings. I think the top line number in EPS will be good, very good. They may surprise with a big spend on a metaverse development, might scare some holders. I think Facebook deserves the benefit of the doubt that this will be money well spent. Oh yeah, that did not age well at all. Okay, so there's a new high. It's still this area here. We'll just wait. If I see some absorption up in here, I might like go full on. Well, Treasuries still pretty random actually through this area. I don't know if they bounced off of those lows really well. Well, I don't know. That might just be the pullback. You say Apple saved the market, maybe. What about Amazon? I would keep a close eye on Amazon because they're the big one today, right? And that, I wouldn't be betting against Amazon. I wouldn't be betting against Amazon. Ah, look at that buy come through there. really strong buy, but the pretty big liquidity hole behind it as a result. Alligator thinks that the day's bottom is in. One thing I did learn today is don't touch mini NQ in the morning on gaps down. It's very, yeah. Come on. You know what? If I'm gonna trade NQ, I'd probably prefer to be doing it when it's going long, because when it goes short, that thing is gonna move so fast. There's no way you're gonna keep up. No way you're gonna keep up on that. No, sir. Well, it looks like a pretty solid pivot there. It's not on the 5-minute chart yet. So if we were to close in the next, oh, no. This is the close of the bar right here. So, okay. So if we're to close somewhere next 5 minutes below 45.20, that might be a good opportunity timing wise. Let's see here, and that would be at the bottom of the hour during the reversal time period. Although this move started at the top of the hour, that's interesting. Not quite sure. So all of the things that I'm looking at right here, and I just sort through all those things in my head, and it's like, nah, that just sounds like all noise. So. Treasuries moved there. Down 2 ticks. It was a little bit more than that, because they were up here at 21 at one point. Treasury's definitely doing something there, man. But some part of what's going on here in the Treasury is the latent liquidity is just not very good. The way that's ticking around is not very good at all. Well, there was a pretty good pullback off of those highs, but the sellers did not really cross any of the kind of like lines in the stand that, I think would have been necessary to really change the trend. At least not so far. Could still come in here. The flow is getting a little bit more mixed in this area. How is autocorrelation an argument against trading the book? When did I say that? You got to understand that when I'm talking about autocorrelation, I'm talking about the fact that you can predict whether the orders are buy or sell to some extent, but that the market makers account for that and that it doesn't necessarily create autocorrelation in price. So you got to remember there's this thing where, like, by the time a metric shows to a critical threshold, to the point at which, like, it's really clear that that's the thing that's happening, for instance, that we're having strong autocorrelation in one direction, that's often where it ends. It's too late. So you really want to predict that thing is going to happen before it happens. How do the market makers account for it? So the way that the market maker accounts for it is that they look at what the signs of the order flow is, and based on the imbalance there, they raise their offer prices. If everybody was buying, they're going to raise their offer prices some degree. Wow, that was a big buy in the treasury. I wonder what was with that. That was kind of a little bit of an unusual setup. Kind of looks like the ES might try and make another push at highs here. Yeah. Some stop, run, squeeze kind of behavior. Well, they just exacerbate it. What it means is that if you want to market buy in that situation, you're not going to get a very good price because of the way that the market maker adjusts to it, right? The market maker lifts his offer, and it's not even like, don't necessarily look at like the resting liquidity. Just think this market maker, he might have his order way up here because he knows a bit about the buys, right? He puts his orders in at a price that they really shouldn't be trading. That if they're trading that price, it's like they're like really pushing too far, so that he can make money when it snaps back. But in order for market making to be profitable, they have to account for the probability of informed trading. This is a pretty aggressive sell there. Treasuries are kind of, well, where was that big order? 19.5? It was one at 19.5, and I guess there was one at 21 earlier. I don't know. So that came back to the lower end of the range very, very quickly, but they still need to make another push. So think about something like this. When I'm talking about that, this is what I'm thinking in my head, okay? Say I bought something and I moved it up, right? If I were to sell it, that would move it down to there, right? And then I would lose money, essentially, because of the inverse sine law. So if I were to brag about my profits, right? I get in here, it's up. I don't want to brag about my profits, because if somebody comes in and takes the opposite trade now at this point, I'm going to be underwater, right? So what I would prefer is it's done this 2, maybe even 3 times. Now if I sell, I'm going to get down to here. And I'm going to make that, right? You get what I mean? So that's why I kind of am always saying here's where like these lines are, is like, I'm not trying to make a predictive call through price action. I'm trying to find the points at which I can be more certain that a meta order a change of some sort has gone through. And it kind of necessitates, what do we have right now? We've got this thing where it's like it did this, and then it came to here. They couldn't even get through this point, and then they came back up, made a little bit higher. Now they're coming back to here, right? So at the moment, they're still kind of teasing us with the point at which, we would need to see it do this and this, and then this, and then we would know for sure that it's changed. And by the way, the correlation of the order flows right now was buys. But you can see they've been buying up through this whole range. It didn't necessarily mean that they broke out to a new high. And in order for it to do that, probably need to continue to see that for quite some time. The Treasury is really kind of toying with them there. I'm gonna try playing it over here. I'm gonna switch it to my experimentation account. Oh no, wait, that's not the right one. It's this one right here. There we go. And I'm going to try and do this right here. It might be too slow. I'll buy that. Yeah. Well, I didn't get the fills that I wanted, but it did work. Oh, really? ECB sources sizable minority wanted to change policy today. That's interesting. I've never seen leaks like this come out like right after the meeting. There must be some real dissension. Interesting. You see that stack there? It looks to me like someone's trying to squeeze them out of this range here. I don't know if it's actually going to go, though. You say there's a battle on NQ. It kind of feels to me like the ES has been fighting this whole time, but it has been mostly buys still. It's just they really seem like they're on the edge, right? Like it would only take like one or two really good sells in the ES to just completely flip this on its head, and we could be at the lows very, very quickly. Arguments at the Fed. I think we should steal people's money like this. No, we should steal like this. No, it's not how it works. let me tell you something. Something that's really interesting to watch on social media and in culture is like, who is the bad guy, right? Because people have different ideas about who the bad guy is, right? There's a lot of people that think that Elon Musk is just like one of the greatest human beings to ever walk this earth, you know? And then there's a lot of people that think that he's evil. And like the bad guy of like every major science fiction movie the past 5 years has been Elon Musk, right? And the Fed in particular, I feel, always kind of gets the short end of the stick, because it doesn't matter if your interest rates are too low or if they're raising interest rates, people are upset, right? Because of the way that the Federal Reserve works, it kind of seems like the institution will always be unpopular, even though I very much believe that their mandate comes first, and that's what their primary. Everybody that says, "Oh well, they're a bank for profit," and it's like, well, it's not. It's not quite like that, guys. Like, it's not just there to serve the banks. So it's only there. They're only working with the banks in as much as it's necessary in order to maintain stability for you and I. You're not getting my Fed is bad from popular culture. That's all. Listen. You go on Reddit. Look at how many people you say that the Federal Reserve is evil versus how many people think that the Federal Reserve are just these great guys and they're doing the best that they can. Right? Because again, whether they are raising interest rates or lowering interest rates, there is it's basically like half of the country benefits from low interest rates and half of the country benefits from high interest rates. And whenever the Federal Reserve is doing something, one of those two sides are unhappy. Every time I put my limit order out here to be like, oh, let's just try and catch a little bit of this range, it doesn't fill. So with this way that this win in the ZN, I kind of would have preferred to have had at least one contract running here, but it's not working out that way. Are they gonna press that high again already? They were just waiting for me to do that, huh? Jeez. It's turning into a little bit of a tight range in ES now, isn't it? Wow. It's official. Facebook is getting the meta ticker from the Roundhill Metaverse ETF. You know what? Crazy prediction. It seems like a really crazy prediction. Like there's no way you're going to like miss like one of the biggest tech runs ever, and you're being anti against like this new technology that's going to be a really big deal in the future, Seth. But I don't think that the metaverse thing is going to work out that well for Facebook. I think that the metaverse is not as compelling as people think it is. And two, that Facebook is not all that well positioned to be the big player in the metaverse. And three, I don't think that anybody likes Facebook's idea of the metaverse. Yeah, exactly. Second Life already exists. It's like the combination of Second Life and VR technology is not actually as compelling as people think it is. VR itself is not actually as compelling as people think it is. It is more a novelty right now than anything. Like my kids really wanted one and they were like super into playing it. Like when they got that, oh man, like the first week it was like we had to have a schedule and they take turns of who was going to use the headset and everything. And since then, I haven't touched it. They haven't touched it. Oh, did I get filled there again? Good job. I'm kind of sad that activity that I was seeing there in the 10-year treasury kind of abated because I was like, it was working really well. I was really catching it and I was catching fills. You're not confident. Well, I think that the ES might need to have a little bit more of a pullback here. When I started my job in consulting, I wanted to explore augmented reality much better. Never really even thought about virtual reality. I think the potential for augmented reality in the form of car windshields and phone apps is better. Oh, yeah, I think you might be right. If they can ever get like like for glasses or like contacts, they can never get contacts that work well. That could be a big deal. Okay. So when I did that, it did take the losses on. Yeah. That's a little bit more promising of a downturn. And look at by the way, the treasuries really ran away from us, right? They never came back into our liquidity. Yeah, I think I'll leave that there. I'll leave this one that I got a really good spot on, at least. And I will, in fact, I think I will even provide some liquidity up here. Because that big order at 24, remember earlier, I pointed out to that 24 area as an area that they might slip back into. And that looks like that's coming out into fruition. Like I feel like that what's going on at Facebook is that they're YOLOing into this idea because this nerd wants it. And I don't think that it's actually going to be that great when he gets it, you know? And they're making a poor business decision because of one guy. That's what I think is going on at Facebook. Well, here's the thing. That's not why they were down, from earnings and all that sort of stuff. So, if things go south for Facebook, it could get so much worse, right? Oh, fine. All right. Well, I don't like the way that I got filled on that one, but it's okay. It happened. Just a little bit more, Mr. ES. Zuck said he had Facebook for 18 years now. It's time for him to let his child go. Oh man, Jake Sherman. Okay, so remember Jake Sherman is the guy that has all of the good political goods. He's retweeting Dylan Byers, who says, "New inside the CNN newsrooms clash with Jason Kilar," and Jake Sherman says Dylan has the goods here. They're basically gloating. They're basically pulling the popcorn out for this whole Jeff Zucker stepping down as president of CNN. Man. Do you think that CNN will change direction with a new president? Well, I'm not too hopeful, but oh, I did get filled there. Okay, wasn't paying attention to my trade over here in the 10-year. I was like, I did get filled on that one, so that's okay. That's why scalping is the only way to make money now. Even if it's not trading, you can still make a small profit. Well, the question here is, so first of all, one of the main reasons why I haven't done what I'm doing here in the treasury with my live account is because I just do not have a live account large enough to provide liquidity for like 5 contracts, right? And again, what is the disadvantage to me here? Because me providing the spread here does give me an advantage, because somebody hitting me into me with the market order is giving up the spread to me, right? Which is, that should be an easy place to get some edge, right? But if I do get filled, there's a good chance that they're going to go through me, right? So the trade-off is you capture the spread versus the adverse excursion. And generally speaking, those two things cancel each other out. The probability of the adverse excursion should be made up for by when capturing the spread. Except for, in the end, this is actually a negative trade, because why? The probability of informed trading. If somebody came in and they knew where things were going, and oh, that's right. They knew where things were going and they hit into me, then I could have this thing go really far against me. Or rather, the problem is when you take a contract here and then they go through 22.5 and then they go through 22 and then they come all the way back down to here, right? Now, as a retail trader, it's a little bit easier than it is if I was a professional trader, because a professional trader has to provide the liquidity on both sides. So they always basically have to trade against everybody, which kind of sucks. Whereas we can pick a side. We can say, well, we're pretty sure that this is going up and we can just make the market up through here, right? But I have to know what's going on. And if there's like some headline that comes through and pushes it down through here, that would be bad. I need to puke. And that's where you're going to take it is, this will tend to work out, except for that one time that the big move against you happens. Ivan the K on Twitter. Dear Disney Plus and other companies similarly situated, if you value my feedback, pay me for it. Thank you, your pal Ivan. And then there was like, fill out this survey. No, I'm not going to fill out this survey unless you pay me to do it. Well, not for If it was like YouTube, when YouTube asks me for a survey, I do it because it's like, yeah, well, that's, we're trying to build a business here of some sort, trying to build a community. I want YouTube to know what will help me. Micro Treasury yield futures surpass 1 million contracts traded, says the CME group. I'm a fan. I really like the micro treasuries, even though there's some real problems with trading them. Oh, by the way, we're below 1.85 now. So that's interesting. Oh, strong buy-in bolts coming in here. Well, but they do. It's not that they suck. Listen, you don't understand what I'm saying. Okay, it's hard to be the one that's taking all of the fills against the move, right? Because which places you start to put your orders in and start to take it matters a lot. And if you are always taking them on both directions, then that basically means that no matter which direction it trends, you will always be taking a position against that trend, which is a problem, right? That's so for a professional market maker that is required by their contract with the exchange to provide liquidity on both sides. That's a big problem for them that they have to deal with, that you, the retail trader, don't have to deal with. Yeah. Your ability to select which side of the market you want to do market making on is a big advantage. Of course, you won't always get it right. But here, if you can make enough from taking them on, so only unofficially market makers screw us up. Well, again, they're just kind of taking advantage of a mathematical model of sorts, right? The market is the one that screws you over, not the market maker necessarily. Facebook has lost a fourth of their value in a little over an hour. Are they heading down again? Who was tweeting that? Joe Scarborough? When Joe Scarborough is talking about it, you know it's bad, right? He's talking about your stock price. Speculator Seth talks about how bad your stock is down. It's your day. Probably. I'm going to talk about all of them at some point, right? But when Joe Scarborough was talking about it, probably bad. Probably bad. Curious, I did not get the fill there. Liquidity is strong on both sides here. They're probably going to have to compromise here. Hmm. How come that one didn't tell me that it was filled? There we go. Oh, really? Well, it's time for me to get going, guys. I'm sad that we don't get to see how this plays out. I'll probably just leave these on and see where they go. So, if the S&P 500 falls later today, then give me come back on the video and congratulate me. I'll see you guys tomorrow. In the meantime, stay profitable, friends.